Good morning, everyone. It is Thursday, August 12th, and this is Nadex Morning Analysis. I am Todd Rich with Nadex. I would normally say I've got Brian Caprice from Keep Trading Simple, but Brian is out today. So we are having a guest appearance from my colleague Adam McCaden. So Adam, head of product, you've probably caught some of his webinars when he's done some platform demonstrations, and he's the one when you'd like to see more features. He's the one you got to be yelling at to get them done faster. All right. Well, we are going to talk about some hot spots in the market today. Before we jump over there, I do need to. There we go. That was very strange. My mouse completely froze. I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And please do not construe anything either Adam or I say as a buy or sell recommendation. This is an educational session. We are doing this for your educational purposes. So what are we going to be talking about today? And it is a quiet day in the markets. First, what I'd like to bring up before I do anything is this. We can see that there are not really a lot of large news announcements later today. There is the nat gas inventory that we will get a peek at 10:30 a.m. Eastern. If you wanted to take a look at some potential volatility in natural gas, we might even bring a chart up and take a look and see what nat gas has been doing. But that's where we've really been seeing the volatility, is we've been seeing it in the energy sector. By the way, today, jobless claims just came in. Continuing jobless claims down just a little bit. Okay, great. That's actually encouraging for the economy. Initial jobless claims came right in line. And what does it mean for U.S. equity indices? It's meant absolutely nothing. The markets are completely flat across the board. So not much volatility going on in the equity markets, but we'll jump back and take a look at those a bit later. What I would like to talk about, I'm going to go back to yesterday's news. And by the way, I think I put the chat in for, I'll drop the link for the economic calendar in Daily FX if you'd like to get that. I usually drop that in because we are always taking a look at what's going on in the news. Now, yesterday, though, we did have the crude oil inventory come in. Now, what's been interesting with oil, and that is the hot spot on the market right now, and it's sort of catching the headlines. That's the news that we're seeing, which is why we're seeing the volatility in the price of oil. Interestingly enough, and I'll jump over to the charts, but we can see that oil inventories, we're not depleting them as quickly as we were. Gasoline inventories, actually not nearly as bad as what was expected. We were expecting a 1.66 million gallon drawdown. It was only 1.4. We are not depleting. The demand for oil isn't quite as severe, at least what we saw this past week, as what was expected. Now, there's also the supply side of the equation, and we did get an interesting request out of the U.S. over to OPEC to drive production up to pump out more oil, which was really rather interesting. So when we did see that, let me bring this up over here on a chart. If you give me 1 second as I move my platform around. Oil, I mean, this is where the volatility is in the markets. This is really where we've seen it. And we've seen some severe moves down. We're seeing oil sort of climbing out of that hole. Yesterday, and Brian and I would often talk about this, in the European session, there was a push down lower. And when the inventory reports came out, there really not much really happened. It sort of did catch a bottom. This spike that you're seeing in oil was when the U.S. asked OPEC to push out. That was the U.S. saying there's not enough supply. We need more supply out there. And when they signal that there's not enough supply, what happens? The price of oil goes higher. Interestingly enough, we're seeing demand down. Supply isn't as bad, but I don't know why the U.S. There's clearly politics at play. We are seeing some interesting levels. These are some older levels that we've still got this, call it $70 a barrel up above, where we tend to see some type of resistance, where sellers do come in. We've had them, and that was a support level before. Of course, once you break through a support level, we can go back and see when it broke through that 70 level, it actually became a resistance level. And so as we come back up toward that 70, from a technical perspective, you would tend to see sellers kind of come back in. So what can you be doing today? If you saw oil pop back up into this level, there's a possibility that we would see some resistance up there. But it is rather interesting because oil is a supply and demand driven product, and we're seeing some interesting news coming out on both sides of that equation. So keep an eye on oil. There is some volatility happening there. Adam, I don't know if you've got anything else you'd like to add to the crude oil story, other than why is gasoline so expensive for your car?
No, not too much, Todd. I actually don't drive a car here too much, so.
So you see, and this is what I'm talking about. Demand is down.
Yeah, it's all me. I'm the one responsible for oil. Yeah.
So, all right. So that's what we're looking at for oil. I think that's going to be a hot spot in the market. It is someplace where we're seeing some volatility. You take a look at some of the other commodities, by the way, and because the Fed is still not anywhere near doing anything actually with interest rates, gold just holding steady in between a range. Still don't really have any news on what that crazy anomaly was in that massive gold sell-off. Don't know if that was a fat finger error. It was kind of an odd occurrence where we had that massive spike down in the evening. It was in the evening hours when there's no liquidity, so no news. If there were more big sellers in gold, we would have expected to see some type of follow through on that. Instead, what we've seen for this week is it's just been range bound. I don't want to move it in too close to give it the appearances it's jumping all over the place. So gold is a bit range bound. 1760 seemed to be the resistance up above, which is right where it was when it took that bizarre big spike down in very short order. So there's probably some potential ways to play this. If you think gold's going to remain range bound, you could try some of those strategies where you try to keep it in the range, where you can sell the one up above, a binary up above, buy a binary down below, and if it stays in that range, you could potentially capitalize on both of them. What can't happen is you can't lose on both of them. Yeah, if it goes high, if it breaks out of the range, you'll win on one, lose on one. If it drops through the floor, you'll win on one, lose on one. But if it stays in the range, and it's a range bound play, a bit different than the strategy that Dan Cook had gone through. If you haven't caught it yet, the recordings are up on the Nadex website, and they will go live on YouTube today. From Dan Cook did just do a session on the strangle strategy, where you're looking for a breakout, where you buy the upper level, looking for it to break out below, or you sell the one below, and just looking for a breakout move where you don't care which direction it goes. You just want to see it spike higher than the one that you bought up above, or drop below the one that you sold. You want it to break out of the range. So there's the commodities. As I mentioned, with the news this morning, equity markets are all flat. Adam, let's take a look over what's going on in the equity indices. I know that you've been watching the Russell 2000 a bit. I don't know if you want to, for those unfamiliar, the Russell, everyone talks about the Dow. Everyone's familiar with the Dow, the oldest index, the 30 industrials, the tech, the NASDAQ 100. We all know that's the technology stocks. The Russell, the S&P 500, the top 500 stocks in the U.S. Now, what Russell did is they've actually got a Russell 1000, which is the top 1,000 stocks. The Russell 1000 and the S&P 500, they've got the same top 500. Russell 1000 includes the next 500. Very similar indices. The Russell 2000 are the 2000 below that. So it's all of your small cap and some of your mid cap stocks. And we've actually been seeing that the Russell has been where it's been outperforming as the economy's gone up. We've seen the small caps and these mid caps doing better lately than some of the for instance, the Dow or some of these other large cap stocks. Adam, you can go through a little bit what we saw yesterday. I can bring up and we can talk about what we're seeing and whether playing the Russell with a binary option or knockout or call spread could be kind of interesting. I think you've been testing them out with knockouts.
Yeah, absolutely. So you can probably see I have a few knockout positions on, but these on I think most of them yesterday morning. So across all of the U.S. indices, we've gotten a little bit of upward movement. I thought the Russell was most interesting because you can see it's got the most upward movement as of yesterday. Todd, I know before we came on, we were chatting about how there hasn't been much movement in these, although over the last few minutes since we started talking, it looked like there was a bit of a sell-off in a few of the indices here. You can see a drop in the Russell as well as I believe it was in the S&P or in a lot of the markets this morning. Just since we've started this our little back and forth here this morning, there has been a little bit of a sell-off. So we have a little bit of downward momentum. But if we go back out to the larger hourly charts, which I generally like to look at when I'm looking at my knockout positions on the demo environment, definitely still not moving anywhere heavily either way. We're still trading right next to this upper range of this 2203 to 2253 knockout. Excuse me. I generally prefer doing the knockouts in the more on the U.S. indices. So that's usually where I am. Although when I do the binaries, I'm always preferring the what Todd was just going over, that those either range bound strategies or looking for breakout strategies. Always looking for like having both binaries shooting me in one direction or shooting me in the outward direction. So yeah, that's what I'm seeing in the Russell this morning. I see the chat is asking where Brian is. I'm definitely filling in for him this morning. Not sure if I'm,
Brian, you got
really
so much
living up to his
younger,
fears, but,
and you grew a beard, and your hair is a different color.
yeah, Brian, I'm really dry and I'm wearing disguise here this morning, so still giving you the content and analysis that you love. So.
No, I appreciate that, Adam, on the definitely taking a look at some of those knockouts in the Russell, and if you're not familiar with knockouts and call spreads, we also have done some recent education on those. Certainly something to look at on taking a directional play. What I really like about the knockouts is they are a true Delta One product, and no premium, no volatility component. It just gives you those hard stops. Actually, that's so funny. Brian's on the road and he's he's chiming in. I have a beard. It's just gray. So yeah,
I got a few in here. It's turning.
I like how he's lurking in here, so he knows that we're making fun of him when he's not around. I love it. I love it. All right. So Brian will be back tomorrow. But with that, I would like to say, if you got any questions for Nadex, whether it's about the product, any of our products, any of our platform, your account, please email us, customer service at nadex.com. We are very accessible. I got Brian's email up there, which we usually do. But if you want to if you want to reach out to Brian and make sure he's okay on his day off, you can email him at support@keeptradingsimple.com. What did we cover? Oh, I was supposed to flip that over so you can actually see what I was talking about. So what did we talk about today? It is a quiet day. It's the dog days of summer. Sirius is up in the sky, and if you don't know what I'm talking about, that'll give you a homework assignment to find out why it's called the dog days of summer. It's all about astrology. But with that, oil is a volatile spot. We've got clearly some politics at play as deliberations go over, is demand really going up or is it starting to wane a little bit? And how are we doing with supply? Which was interesting. The U.S. would start pressuring OPEC to remove some more of their production curbs and pump out more oil. Pump out more oil. Gold. very much range bound, and the equities based on the tail of the employment claims numbers, not doing much of anything. In fact, I'll give it a quick peek here, and we're still seeing equities pretty much flat across the board. So, it is going to be a bit of, it's setting up to be a slower day, but we will see what tomorrow has for us then. Oh yeah, and I love it. And we do have nat gas. We do have that nat gas oil, the nat gas inventory report. Yesterday, it didn't do much for oil, but you can certainly take a look over at the nat gas. And I did drop the link into the calendar so you can track that number and when it actually comes out. But we might see some opportunity there. With that, want to thank everyone for joining us. Brian will be back tomorrow, and good luck in the markets, everyone. We'll catch you later. And thank you, Adam, for filling in today. Good to have you.